All right, everyone, we got some big housing market updates and I'm going to cover in today's video on the Reventure Market Reports YouTube channel. We're going to talk about the big drop in mortgage rates. We're going to talk about the oncoming recession, as well as leading off with updated inventory and price cut data across the US housing market. You can access this data on Reventure app, but I'm going to show it to you here in this video first, everyone. And the big story continues to be the inventory growth across the housing market, particularly in Florida, in the rest of the Southeast, as well as now even in Arizona and California. We are beginning to see a big inventory spike, everyone. Let's just lead off looking at Florida, everyone. Inventory up 70% year over year. A massive jump. We went from 83,000 homes last year in Florida on the market to 141,000 this year. That's the highest level for July, going back at least 7 to 8 years. And so when you see inventory jump that fast in your market, everyone, it's a signal that there is a downturn occurring and that things are going to get better for you as a buyer as more supply hits the market. In addition, everyone, another market where inventory is now rising surprisingly fast is actually California. We're up to 57,000 homes on the market in California. Now, you can see that this is still below the long-term trend line here. However, it's up significantly from last year, almost matching what we had in 2022 when California had that housing correction. And you can see kind of month by month, this inventory is rising pretty quickly. So I wouldn't be surprised if we end up with 65,000 homes on the market soon in California. And then we see some of these price increases we saw previously start to turn to price declines once again. And the one thing to take away from this, everyone, is that the housing market is moving fast right now in August 2024. If you're a buyer, investor, or seller, you have to pay attention to the data and the data in your market specifically related to inventory, price cuts, overvaluation, and the Reventure app home price forecast score. These numbers are moving fast and signaling big shifts in the market. In particular, we're seeing downward shifts in a lot of markets right now, everyone. Price forecast score is going negative, suggesting that over the next 6 to 12 months, prices are going to drop. Now, before I get into more of the data on the inventory and price cuts, we have to address mortgage rates right now, everyone, because mortgage rates have absolutely plummeted over the last week and over the last actually like 2 or 3 months. Everyone, we could see that the 30-year fixed mortgage rate is now down to 6.3%, according to Mortgage News Daily. 6.3% 30-year fixed mortgage, when back in April it was 7.5%, and back in October of last year the mortgage rate reached 8%. So we're now at kind of the lowest mortgage rate that we've seen in a while. If we go to the 5-year graph, we can see this is the lowest mortgage rate that we've seen since basically like early 2023. And so that's good for good news for you as a buyer. The mortgage rates are dropping. There's more affordability coming to the market. However, on this 5-year graph, you can see somewhat of the issue, right? Is that prior to the pandemic, even the mortgage rates were 3.6%, right? Mortgage rates were 3.64% for a while, then they went down even more during the pandemic. Now they're still up significantly, and the affordability is still constrained. And the one thing I want you guys to understand is that this drop in mortgage rates is unlikely to bring much of an improvement in buyer demand into the market, because this drop in mortgage rates is occurring alongside what looks to be a worsening economic downturn and recession. The unemployment rate is increasing significantly. We've triggered the SOM rule, which basically says after the unemployment rate increases a certain amount in a certain period of time, recession becomes inevitable. So there's certain downward momentum in the economy building that suggests we're going to see more job losses. Now, at the same time, we're seeing the stock market enter a correction. Stocks have gone down a lot the last 3 to 4 days. We'll see what they do into the future, but more and more it looks like this quote unquote like soft landing or no landing that everyone thought we were going to have. It looks like that's not going to happen. And so declining mortgage rates are coming alongside declining economy. And historically, that suggests that we're not going to see a market improvement in buyer demand. And that's one thing I want you guys to understand, is that there's going to be a lot of people who are going to try to FOMO you over the next 1 to 2 months. A lot of realtors, a lot of mortgage brokers, a lot of real estate investors are going to get out there on YouTube and Instagram and are going to try to tell you that you have to buy now because the mortgage rates have gone down. And of course, you have to make your own decision, your own personal decision about what's right for you. But I'm here to tell you that the historical data says that it's not a given that buyers come back into the market because of this mortgage rate drop. In fact, we can see that the typical monthly payment for a home buyer in America has now dropped to $2,700 a month due to this drop in mortgage rates from a high of $2,900 a month. So we've improved about $200 a month on our monthly payment due to this drop in mortgage rates. As you can see, we're still way higher than we were before the pandemic in terms of what your mortgage, taxes, and insurance would be if you buy a house in America on average. And this goes to show you just how much the affordability issue is still there. A 1% decline in mortgage rates really does not change much in terms of the calculation here for most home buyers. What we really need to see is declining prices. And what I actually think the magic number is, everyone, in terms of unlocking buyer demand back into the market, I think it's $2,100 a month for that national home buyer mortgage tax and insurance payment. I think once we get to $2,100 a month, that's the payment when the buyers are going to return. And you could see that we are still a pretty far way off from that level. In fact, what has to happen for us to get from $2,700 a month to $2,100 a month is a 15% drop in prices and for mortgage rates to go to 5.5. And so that's what I think would unlock buyer demand. If mortgage rates continue plummeting and go to 5.5 and prices drop 15%, that I think would return enough affordability into the market to start bringing buyers back. And the builders have kind of proven that, right? The builders have cut prices 10%, 12%, and they're giving aggressive mortgage rate buy downs in the mid-5 range. And the builders have kind of had a small increase in buyer demand, almost back to pre-pandemic levels. So the builders have kind of already proven out this hypothesis in theory. If you have inventory and you cut prices 10 to 15% and you give a 5.5 mortgage rate, you can get buyer demand not back to the pandemic heights, but you can get it back to 2018, 2019 levels. So that's what I think needs to happen for buyer demand to return. Of course, buyer demand might not return at all, everyone. I mean, we've seen in markets like Austin, where prices have gone down 20%, there's been no bounce back in buyer demand in Austin or Phoenix or Boise or now in Florida. There's been no bounce back in buyer demand from the markets where prices have dropped. So that's the other interesting thing, is that once prices actually start going down, buyers tend to get a lot more reserved, in the sense that once prices are down and it's obvious that prices are going down, there's no rush to buy. But ultimately, you have to make a decision based on the data in your market. And this is where we need to go back to Reventure app and take a look at the home price forecast score for every state in America, everyone. So Reventure app has a data point, home price forecast. This is a premium data point, and I'm going to show you this data point at the state level, everyone. Give you a glimpse here behind the curtain on our home price forecasts for different areas of America. And you can actually see that the highest home price forecasts right now are in Illinois, New Jersey, and Connecticut. These markets have the highest home price forecast, 66, 63, 62 out of 100. We can see really it's the Northeast, New England, and parts of the Midwest where prices are still projected to go up. And the reason that's the case, everyone, is because we still have a big inventory shortage in these states, these areas in blue now, big inventory shortage. We actually have very few price cuts, and we have days on the market, which is still going down. So if we have low inventory, low price cuts, and days on the market still going down, prices are still going to go up. And this is the beauty of the Reventure app home price forecast score, everyone. It takes all of these real-time data points and puts them together and puts it into one data point, so you as a buyer and investor can see in your state, city, and zip code what the trends in the market are and are likely to be in the future. Now, if we go back to the price forecast score, we can see these areas in red, Northeast and Midwest, forecasts to still go up. And this could change in the next couple months depending on what happens in the economy. However, for now, we're still have an upward price forecast here, Northeast and Midwest. Now, we have a downward price forecast in Florida, Texas, Tennessee, Arizona, Colorado, Utah, Washington, Oregon, and Idaho. These areas in blue, we have a downward price forecast, and the worst score is in Texas, everyone. Texas is a 39 out of 100. In every metric, recent appreciation, days on the market, mortgage rates, inventory, price cuts, Texas is looking weak, suggesting prices will continue to drop in Texas. We were in a big seller's market a couple years ago. Now we're in a big buyer's market in Texas. Expect prices to go down in Texas. Also expect them to go down in Florida, everyone. I think Florida is going to join Texas really soon. and having a price forecast in the 30s. I think we're going to see that soon in Florida. And also, don't sleep on some of these other markets in the Southeast, everyone. South Carolina, Georgia, Alabama, Tennessee. Some of these markets are starting to weaken and weaken quickly. Like if we look at Tennessee, home price forecast, and change it to monthly, we can see it's kind of gone down quite a bit the last couple months alone. And again, that has a lot to do with increased inventory. And if you guys want to access more of this data from a granular perspective, sign up as a premium member on Reventure app. The cost is $39 a month. And then you can get access to the price forecast for every metro in America, every county in America. So there's big differences in counties, everyone. So you got to understand what's going on. Out here in California, we can actually see, California is interesting because we're seeing kind of markets that are, I would say, stable. Like I think California markets are stable. Orange County still going up, but LA is like a more stable market. But I think these markets are starting to tilt down because if we take a look at the price forecast in LA, we could see, it was a seller's market, then it became a buyer's market, then it became a seller's market again. Now it's starting to tilt down again because the inventory in Los Angeles County, look at this, everyone, the inventory in the LA County is now starting to go up. It's above the long-term average. So you can access all that data at www.reventure.app. Like I said, sign up for a premium plan. The cost is $39 a month. You are not going to regret signing up for a premium plan on Reventure app. Because if you're a buyer, investor, or seller, this data is going to give you a window into what's happening in the market and help you make a more educated decision, especially that price forecast score. Now, one thing I do have to warn you about is that we're going to have to track the market, especially closely the next 1 to 2 months, to see what the reaction is to these lower mortgage rates. My suspicion is that it's not going to do much to improve buyer demand. However, we're going to need to track that and verify that by looking at the mortgage application index on a weekly basis and by looking at this inventory and price cut data on a monthly basis. So if you want to stay on top of this data, do two things. Number one, sign up for a subscription on Reventure app. And then number two, subscribe to this channel, the Reventure Housing Market Reports YouTube channel. This is where I'm going to put more and more kind of like my deep dive real estate analysis on this channel. If you're not a subscriber yet, hit that subscribe button, turn on those notifications.